Hello guys, we are discussing uh, compromises, arrangements and amalgamations. In the previous class, we have completed section 230 and 231. Before starting today's class, let me revise what we have discussed in the previous class for 5 minutes. We have covered section 230. What section 230 deals is procedure relating to compromise and arrangement. If there is any dispute in the company with either shareholders or creditors, and company wants to enter into compromise, or even either shareholders or creditors want to enter into compromise with the company, or else company wants to enter into an arrangement, then it has to file application with NCLT. Form of application is NCLT 1. This application can be filed by either company or members or creditors or official liquidator. In case of voluntary liquidation, they can file the application with NCLT, and there are some disclosures which have to be made in the application that has to be filed with NCLT. After taking the application, NCLT will verify the application and will will ask the applicant to conduct meeting of either members or creditors as per the situation. If the compromise or arrangement is with members, then the meeting will be of members, or if it is with creditors, then the meeting will be of creditors or class of creditors. After that, we have seen provisions relating to notice of the meeting. That is, what are the contents that has to be present in the notice of the meeting and where the notice has to be advertised. After that, once the notice is and even we have discussed the disclosures that has to be given along with the notice. Once the notice is given to those members or creditors, and even to the what we said is some, what we call them, statutory regulators under section 230 subsection 5, that is income tax authorities, central government, CCI, even to those regulatory authorities we will be sending the notice. And after sending the notice, people will come to the meeting, and in the meeting they have to approve this compromise or arrangement. And for approving the compromise, it should be approved by majority of members who are having majority of members representing 3/4 of value of either shares or total debt outstanding. If in case of members, it will be share value. In case of creditors, it would be debt outstanding. That would be the requirement for the purpose of approving this compromise. Once the compromise is approved, it will be filed again with the NCLT, and NCLT will pass a final order. We have seen that what are the contents to be included in the final order that has been passed, that will be passed by the NCLT. Till final order is passed is covered by section 230. And we have also seen section 231, wherein section 231 gives power to NCLT to implement the order or to oversee the implementation process of the order that has been passed by the NCLT. If at all NCLT feels that during implementation process the order cannot be actually implemented due to some practical issues, then even NCLT can order for winding up of the company. Till section 231, till this concept we have discussed in the previous class. By that we have completed our compromise or arrangement, that is procedure relating to compromise or arrangement. Now in this class we will move into amalgamation or merger, you can say. What is the procedure to be followed for the purpose of amalgamation or merger? See, before 1 minute, see, before moving into the sections related to amalgamation, you need to remember a fact that even amalgamation or merger is also a type of arrangement. Okay, even amalgamation and merger is also a type of arrangement. Therefore, for the purpose of amalgamation or merger, we will be following the requirements which we have read in section 230, that is 1 minute, requirements which we have read yesterday under section 230, that is relating to compromise or arrangement. The reason is even amalgamation or merger is also a type of arrangement. Okay, while reading our section 232 which is relating to amalgamation, we will be taking help of this section 230 also. Okay, what we have read in section 230 will be useful even while learning section 232. Okay, so you have to carry forward what are all the provisions you have read in section 230 while reading section 232 also. You have to remember them for the purpose of understanding section 232. Okay, with this brief understanding we will move into amalgamation. Yesterday we have discussed the section in the PPT, but today for section 232 we will be reading from the book itself. Okay, I will be simultaneously reading the point and will be explaining the same with the help of charts. Okay, where is amalgamation? Yeah, here it is. See, understanding the concept of amalgamation. First point, amalgamation means an amalgamation pursuant to provisions of Companies Act 2013 or any other statute which may be applicable to companies and includes merger. Basically, amalgamation means, let's say there are two companies, A Limited and B Limited, and these two companies are going to merge into, let's say, AB Limited. This is one of the example of amalgamation. Or it can also be that, let's say there is A Limited and B Limited. Now A Limited is purchasing B Limited. Once the amalgamation is completed, there will be no B Limited. This results into only A Limited. Okay, in this case basically A Limited is absorbing B Limited. Even amalgamation can be in this type also. Okay, in this basically amalgamation can be of these two types. Now in this case, which companies are called as transferor companies and which companies are known as transferee companies? Okay, starting with transferor company. Transferor means the person who is giving will be known as transferor. In the first case, this A Limited and B Limited are combining and becoming AB Limited. In this case, transferors will be A limited and B limited, because they are transferring their business to AB limited. Transferor, okay. And transferee means the company which is taking the business will be known as transferee, okay. Transferor means the company which is merging its business, that is which is giving its business, and transferee means the company which is taking the business of some other company. That would be the first, those will be the transferor and transferee in the first case. In the second case, here B limited is giving over its business, therefore it will be transferor. And A limited is taking the business of B limited, therefore it would be transferee. Hope you are clear with this concepts of transferor and transferee. Write them clearly. Transferor, okay. If you want, you can note them down. This is case 1, this is case 2, okay. We'll use some other color. Case 1, case 2, transferor, transferee, transferee, transferor. Hope you noted down. See, he has explained what is transferor company and what is transferee company. Let's see. Transferor company means the company which is amalgamated into other company. Company which is giving, that is which is getting amalgamated into other company. See here, B limited is getting amalgamated into A limited, therefore it will be transferor company. Here in the even this case, A limited and B limited are getting amalgamated into AB limited, therefore they will be transferor companies. And the transferee company means the company into which a transferor company is amalgamated. See, transferee means a company into which transferor companies are getting into amalgamated. Such company will be known as transferee company. Even in this case, the company into which transferor company is getting into amalgamated, that would be A limited, would be transferee company. Hope you are clear with these terms. And merger, reconstruction, amalgamation is one of the scheme of compromise or arrangement. See, the point which I have said you have to consider that even merger, amalgamation and reconstruction are also one of the scheme of compromise or arrangement only. And even here demerger is also a arrangement, okay. This section which we are going to read, that is section 232, will be applicable even for demerger also. Okay, not only for amalgamation and merger, even for demerger also this section 232 will get applicable. Might be you are getting you are having a slight confusion regarding how amalgamation or demerger or merger can be called as compromise or arrangement. To get a clarity on this concept, let me explain you with an example. Okay, let's say there is okay, we'll go with normal examples. There is a company by name A Limited. Okay, this company has taken loan from B Limited. Okay, taken loan. Okay, now this the condition of A Limited is not that good and it has defaulted in repayment. Okay, it has taken loan from B Limited but it was not able to repay the loan. As a result, dispute has arose. Okay, now to compromise this dispute, as a part of compromising this dispute, what they have agreed is that, let's say the amount of loan is some 20 crores. Okay, and let's say the net worth of this A Limited is some 15 crores. Okay, is the net worth of the A Limited is less than the amount of loan. Now in this situation, as a measure of compromise, what they have decided is, B Limited has decided to take over A Limited, that is to merge A Limited with B Limited. Since the A Limited is not able to repay the loan, B Limited has thought of merging A Limited with B Limited. Okay, hope you understood the situation. In this case, this would be an example of compromise, that is scheme of compromise or arrangement. Okay, therefore even amalgamation or merger is also an arrangement or compromise, you can say. You can note down this example. Merger or amalgamation. In this way, even merger or amalgamation can be considered as scheme of compromise or arrangement. Therefore, it has to follow section 230 along with section 232. Okay, hope you noted down. We'll move into the concept. We have discussed amalgamation. Now Types of amalgamations. Basically this diagram is from ICS study material itself. I have copy pasted from ICS study material. What are the types of amalgamations? Let's see. Types of amalgamations. There can be two types of amalgamations. One is amalgamation in the nature of merger, amalgamation in the nature of purchase. Now, amalgamation in the nature of merger means there is a genuine pooling not merely of assets and liabilities of the amalgamating companies. The same business of transferor company is continued. In case of merger in the nature of amalgamation in the nature of merger, it is not that only assets and liabilities of transferor company will be taken over by transferee company. Even the business which this transferor company was doing will be continued by the transferee company also. That would be the amalgamation in the nature of merger. Now, amalgamation in the nature of purchase. Here only assets and liabilities are taken over. Generally the same business of transferor company is not continued. Whereas in case of amalgamation in the nature of purchase, see here the term specifies purchase. That means it only purchases assets and liabilities of transferor company, and this transferee company will not continue the business that was being carried on by that transferor company. Hope this is clear to you. Therefore, the difference between amalgamation in the nature of merger and purchase is only with respect to business. Okay. Difference between amalgamation in the nature of merger versus purchase. In case of merger, business of transferor will be continued by transferee, but in case of purchase, business of transferor will not be continued by transferee. Okay, this is the major difference between amalgamation in the nature of merger and amalgamation in the nature of purchase. If you want, you can note this down. This is transferor, this is transferee. Okay, hope you noted down. I'm moving into the concept. That is the two types of amalgamations. See, this is different. See, this concept is different from this concept which we have discussed. Okay, this is the mode of amalgamation. Okay, after amalgamation completed, into which mode the companies will be entering, that is what we have discussed in this concept. Whereas this one which we have recently discussed is the types of amalgamations. Okay, the one which we have discussed previously is different from the one which we have discussed now. Okay, methods of accounting for amalgamations. Okay, methods of accounting for amalgamations. Pooling of interest in case of amalgamation in the nature of merger. See, if it is amalgamation in the nature of merger, then pooling of interest method will be followed. This one you would have already learnt in your accounts, in your FR. Okay, and if it is a merger amalgamation in the nature of purchase, then purchase method will be followed. Okay, here purchase method will be followed. That is a brief discussion relating to the methods of accounting. Now, thus amalgamation is blending of two or more existing undertakings into one undertaking. Okay, that is combining two or more undertakings into one undertaking. Okay, the shareholders of each blending company means the companies which are getting amalgamated, that is we can say transfer or companies. Blending company means transfer or companies. The shareholders of each blending company becoming substantially the shareholders in the company which is to carry on the blending undertakings. Okay, that means the shareholders of company which is getting amalgamated will become part of that transferee company, that is being said in that section, in that point. There may be amalgamation either by transfer of two or more undertakings to a new company, or by transfer of one or more undertakings to an existing company. See, here he is saying the two types of amalgamations which we have discussed previously. That is, here we have discussed the case 1 and case 2. Here, there he is talking about these points. Okay, where he says there may be amalgamation either by, oh come on, 1 second, what happened? Yeah, What he says, there may be amalgamation either by transfer of two or more undertakings into a new company. That means company A limited, B limited becoming AB limited, which is completely a new company. That is, AB limited was not in existing previously, but now a new company AB limited has came into existence by amalgamating A limited and B limited. Amalgamation can be either by this form or by transfer of one or more undertakings into existing company A limited, B limited. Now A limited is taking over B limited into A limited, thereby there will be only A limited. That means the company which was previously existing is taking over, or you can say purchasing or merging another company, that is B limited. These are the two types of amalgamations. Now we will see the two types of amalgamations in detail. Okay. For an amalgamation to be called as amalgamation in the nature of merger, that means the business of that transferor company will be carried on by transferee company after the amalgamation gets completed. To call an amalgamation as this kind of amalgamation, that is amalgamation in the nature of merger, there are 5 points to be satisfied. I think which you have already know these points. You might have read these points in your accounting standard, that is AS14, I think. There you might have read these points. Even in at final level in FR, you might have read these points while discussing this consolidation chapter. Okay. However, we'll once read these points again. Amalgamation in the nature of merger is an amalgamation which satisfies all the following conditions. Okay. If any type of amalgamation satisfies all these 5 points, then it will be called as amalgamation in the nature of merger. Otherwise it would be amalgamation in the nature of purchase. The first point is, all the assets and liabilities of transferor company become after the amalgamation assets and liabilities of transferee company. Okay, there is nothing to explain, easily understandable. All the assets and liabilities of transferor company must become the assets and liabilities of transferee company. Okay. Second point, shareholders holding not less than 90% of face value of equity shares of transferor company other than equity shares already held therein immediately before amalgamation by transferee company or its subsidiaries or the nominees shall be equity shareholders of the transferee company by virtue of amalgamation. Basically what it says, 90% of shareholders who are 90% of shareholders of this transferor company must become shareholders of transferee company after the amalgamation has taken place. This condition has to be satisfied to call the merger as the amalgamation as amalgamation in the nature of merger. That is the second condition. Third condition, I am going a little speed with these 5 points because you might have already read these points. That is why I am just going through them very fast. Third point, the consideration for the amalgamation receivable by those equity shareholders of transferor company who agree to become equity shareholders of transferee company is discharged by the transferee company wholly by issue of equity shares in the transferee company, except that cash may be paid in respect of fractional shares. What it says, transferor company is transferring its business to transferee company. For this, transferee company will pay purchase consideration to transferor company. What this point says is that this purchase consideration should be completely in the form of equity shares of transferee company only. However, cash can be paid in respect of fractional shares. Okay, even this condition has to be satisfied to call that amalgamation as amalgamation in the nature of merger. Now, fourth point, the business of transfer or company is intended to be carried on after the amalgamation by transferee company. Okay, this is the major difference between amalgamation in the nature of merger and amalgamation in the nature of purchase, which we have dealt in the form of chart. And fifth point, no adjustment is intended to be made to the book values of the assets and liabilities of the transferor company when they are incorporated in the financial statements of the transferee company, except to ensure uniformity of accounting policies. Basically what it says, you have to incorporate the assets and liabilities of the transferor company as it is. You should not make any modifications to them while bringing them to the balance sheet of this transferee company. You have to bring them as it is. Okay, to call an amalgamation as amalgamation in the nature of merger, these 5 points have to be satisfied. Okay, not that any one point has to be satisfied, all 5 points has to be satisfied. Then you can call such type of amalgamation as amalgamation in the nature of merger. What we have discussed in this chart is the major difference. This is just the major difference. Okay, apart from this point, even those remaining 4 points should also be satisfied to call a merger, to call amalgamation as merger. Okay, amalgamation in the nature of purchase. Okay, let's read it. Amalgamation in the nature of purchase is an amalgamation which does not satisfy any one or more of the conditions specified above. If amalgamation doesn't satisfy any one of the condition which has been specified above, that is out of that 5 conditions, if any one of the condition is not satisfied, then such type of amalgamation will be amalgamation in the nature of purchase. Okay, chapter 15 covering section 232 240 of Companies Act 2013 deals with provisions related to compromise, arrangement and amalgamation. Basically the chapter which we are presently reading is chapter 15 as per Companies Act. Okay, as per Companies Act, as per Companies Act, as per Companies Act, as per Companies Act, this chapter, that is compromise, arrangement and amalgamation, is covered under chapter 15, which deals with section 230 to 240. Okay, the compromise, arrangement and amalgamation reconstruction requires approval of NCLT. See, you should remember that whenever there is a amalgamation or merger or demerger, you have to compulsory take permission of NCLT, and that permission, for the purpose of taking that permission, you have to apply section 232 along with section 230 which we have already discussed, and 232 which we are going to discuss now. Okay, you remember that even in the practical life, whenever two or more companies are amalgamating or demerging, then you have to apply these sections. As per these sections, you have to take approval from the NCLT. Okay, now this chapter is a complete code in itself, which contains provisions regarding all forms of compromises with creditors and arrangements with members, the procedural aspects involved in such involved, such as format of application to be made to made to National Company Law Tribunal, form of notice, and procedural aspects involved with respect to substantive law are covered under rules made under chapter 15 of the act. Basically what it says is like, for the purposes of this amalgamation, merger and compromise and arrangement, the provisions which are discussed in this chapter 15, that is from section 230 to 240, are like Bhagavad Gita. Okay, for the purpose of this amalgamation and merger, these 11 sections are like Bhagavad Gita. We have to blindly follow these sections. That is what said by this point. Now let us move into the section. See, before entering the section, you please don't forget that amalgamation and merger is also a type of compromise or arrangement. It is very important that you have to keep this sentence in your brain to understand the section which we are going to read now. Okay, to please note down this sentence in your book also, saying that amalgamation or merger, or you can say demerger, or also a type of compromise or arrangement. Okay, you please note down this sentence. Wow, my handwriting has improved. I think it is quite better when compared to previous classes, I think. Okay, this point is very important. Okay, hope you noted this point. We'll move into section. It is section 232. Let me have some water. See, sorry for the disturbance. Okay, we'll move into section 232 then. Section 232, merger and amalgamation of companies. Okay, sorry, before reading section 232, first of all we'll have to read the explanation that has been given to the section 232. There is some explanation part that is given at the end of the section. Before reading the section, let us read that explanation. Basically in the explanation, he has given some terminology which has to be applied while reading this section. Basically there are four terminologies with relation to this section 232. Let us read them. Explanation. For the purpose of this section, that is section 232. First one, merger by absorption versus merger by formation of new company. This one we have already discussed. We will read once again. Where under the scheme the undertaking, property and liabilities of one or more companies, including the company in respect of which the compromise or arrangement is proposed, are to be transferred to another existing company. It is a merger by absorption where the undertaking, okay, the sentence is still here, that would be merger by absorption. If A Limited is taking over B Limited, this would be merger by absorption, because here the company which is already in existence is taking over another company. Therefore it would be known as merger by absorption. Okay, merger by absorption. If at all, where the undertaking, property and liabilities of two or more companies, including the company in respect of which the compromise or arrangement is proposed, or to be transferred to a new company, whether or not a public company, it is a merger by formation of new company. If A Limited and B Limited are together forming AB Limited, then that would be known as merger by formation of new company. Let us give the names in our chart. We have, this chart. See, case 1. This case 1 will be known as merger by absorption. Sorry, not absorption. Formation of new company, because here new company AB Limited is forming now. Merger by formation of new company. That would be first case. And the second case would be, the second case will be known as merger by absorption, because the existing company itself is absorbing the transferor company. Therefore it will be merger by absorption. Hope this is clear. That is the first explanation. Okay, second one, merging companies. Which companies will be known as merging companies in relation to this section? We'll see. Merging companies are in relation to a merger by absorption to the transferor and transferee companies, and in relation to merger by formation of new company to the transferor companies. Okay, basically what he says is, again we'll go to our chart. See, in the first case, let me take another pen. Yeah, here in case 1, where merger by formation of new company, which company will be known as merging companies? The answer is A limited and B limited will be known as A limited, B limited will be known as merging companies, and AB limited will not be a merging company. The reason is it is still not in existence before the merger. It has came into existence only after merger has happened. Okay, what is the relevance of these merging companies? Why are we learning which companies are merging companies and which companies are not merging companies? Because this section 232 has to be followed by merging companies only, and other companies need not follow. Therefore, in the first case, section 232 has to be followed by A limited and B limited only. AB limited need not follow because still it is not in existence at the time of proposing this merger. It has came into existence only after merger or amalgamation has completed. Therefore, it need not, that is AB limited need not comply with provisions of section 232. Only A limited and B limited have to comply with provisions of section 232, and therefore thereby they will be known as merging companies. In the section he will be using the terminology merging companies have to do this, merging companies have to follow this, merging companies have to get this approval. Here while he uses those terms, we have to think that merging companies means these companies. That is the reason why he has given explanation. And in case of second case, merging companies means both the companies will be known as merging companies, because before in the second case the existing company itself is taking over the company. Any new type of company is not being formed. Therefore, since both the companies are in existence before the merger, even in the second case both A limited and B limited will be known as merging companies, and they have to follow section 232. Okay, A limited and B limited will be known as merging companies and they have to follow section 232. Hope this is clear. That is the relevance of merging, the term merging companies. It specifies which companies have to follow section 232. Okay, hope you understood it. See, moving to third term, that is scheme involves a demerger. What he specifically says that even for, in this point he says that even for demerger the companies have to comply with section 232. That is the point that he will be saying in this point. Let's see. Scheme involves demerger, where under the scheme the undertaking, property and liabilities of a company in respect of which compromise or arrangement is proposed are to be divided among the and transferred to two or more companies, each of which is either a existing company or a new company. What he says is that even in case if you want to divide the properties or undertakings of a particular company into two or more companies, which will be known as demerger, you have to follow section 232. That is what he is saying in this point. Hope you are clear with this. And lastly, he defines property includes assets, rights and interests of every description. That is the definition of assets. that is the definition of property. And liabilities include debts and obligations of every description, that is the definition of liability. This is the simple explanation that we have completed before going into the section. It would make more sense if you read the explanation before starting the section instead of reading the explanation after completion of the section. Okay, now moving into section 232. Section 232, merger and amalgamation of companies. Okay, section 232 of Companies Act 2013 empowers NCLT to order merger or amalgamation. Okay, if at all a merger or amalgamation has to be entered into, then the permission of NCLT has to be brought, or the NCLT must grant the permission for the merging companies. Okay, and for getting the permission you have to follow section 232. Let's see what section 232 says. Subsection 1, filing of an application for purpose of reconstruction or companies involving merger or amalgamation or transfer of undertaking, property, etc. Subsection 1. See, this section 232 deals with all these types of transactions, that is reconstruction of company, merger, amalgamation, transfer of undertaking, or transfer of undertaking or property, etc. and demerger. With all these transactions section 2 deals with. Basically subsection 1 says how you should file the application with NCLT. Let's see. Where an application is made to the tribunal under section 230. See, here he has brought the reference of section 230 which we have already read regarding compromise and arrangement. That means even for amalgamation and merger you have to make the application to the NCLT as per section 230 only. The reason is even amalgamation and merger are also type of a compromise and arrangement. That is the reason why the application that you will be making to the NCLT will go to NCLT in section through section 230 only, even for amalgamation and merger. That is the reason why he has brought the reference of section 230 in section 232 while discussing application for amalgamation and merger. Okay, let us read it. After reading entire subsection we will again discuss it. Where an application is made to the tribunal under section 230 for sanctioning of compromise or an arrangement proposed between a company and any such persons as are mentioned in that section, and it is shown to the tribunal that compromise or arrangement has been proposed for the purpose of or in connection with a scheme of reconstruction of company or companies involving merger or the amalgamation of any two or more companies, and that under the scheme the whole or any part of undertaking, property or liabilities of any company hereinafter referred to as transfer or company is required to be transferred to another company hereinafter referred to as transferee company, or is proposed to be divided among and transferred to two or more companies, the tribunal may on such application order a meeting of creditors or class of creditors or members or class of members as the case may be, to be called, held, and conducted in such manner as the tribunal may direct, and the provision of subsection 3 to subsection 6 of section 230 shall apply mutatis mutandis. What this section, subsection 3 to 6 regarding notice of meeting, which we have dealt in section 230, all those section will apply mutatis mutandis to even section 230, even in case of merger or amalgamation. See, let us see what this subsection is saying. Let's say a company wants to amalgamate or merge with another company, or a company wants to demerge. For this purpose, it has to file an application with tribunal, and the application has to be moved to the tribunal under section 230, that is compromise or arrangement, and the company has to say that this compromise or arrangement involves merger of two or more companies or demerger of the company into two or more companies. This has to be mentioned in the application, saying that the compromise or arrangement that is being proposed in this application involves merger or amalgamation. This has to be stated in the application. Okay. In this way, you have to make application to NCLT for the purpose of amalgamation or merger. And after you make application, in the same way, NCLT will verify the application, and if application is as per the we will read what should be included in the this application made for amalgamation with the NCLT. What are the contents to be included in this application? If all those contents are present, then NCLT will order the applicant to conduct meeting of shareholders or members, you can say, as in the same way which we have discussed in section 230. Once NCLT is satisfied, it will order the applicant to conduct a meeting. Even in case of amalgamation also, once the NCLT is satisfied with the application, it will order the applicant to conduct meeting of shareholders. Here meeting of creditors will not be required because it is related to amalgamation, and in the amalgamation only shareholders will be having relevance, not the creditors will be having will have nothing to do with the amalgamation. Okay, so meeting of shareholders will be called, and for the purpose of calling the meeting, you have to give a notice of the meeting. For the purpose of the notice, subsection 3 to subsection 6 of 230, which we have discussed earlier, will apply mutatis mutandis, that is the content to be included in the notice, and where it has to be advertised, and to whom it has to be sent, which we have already discussed in subsection 3 to subsection 6 of section 230, which will even apply to our section 232. Okay, that is subsection 1 of section 232. Now moving into subsection 2, circulation of information for the meeting by merging companies. See, here he has used the term merging companies. For this you have to refer explanation which we have discussed. What companies will be known as merging companies, which we have already discussed. Now the companies in respect of which, or a division, that means demerger, is proposed, where an order has been made by the tribunal as above, merging companies or companies in respect of which a division is proposed shall also be required to circulate the following for the meeting so ordered by the tribunal, namely. See, in section 230, along with notice, some disclosures have to be made. Those disclosures have to be made even in case of section 232 also. Along with those disclosures, additionally these 5 disclosures should also have to be made. What are those additional 5 disclosures which are applicable exclusively for the amalgamation or merger? These disclosures have to be made in the notice which you will be sending to shareholders for the purpose of meeting. Okay, which meeting? The meeting which will be conducted for the purpose of approving the amalgamation or merger. Okay, not meeting of annual general meeting. The meeting which you will be organizing for the purpose of approving amalgamation or merger. For the notice of such meeting, these disclosures has to be given. What are the disclosures? Let us see. Draft of proposed terms of scheme adopted by board of directors of merging companies. See, here why tribunal is asking to circulate the draft of proposed terms of scheme which is adopted by board of directors, because while reading directors chapter, in the duties of chapter of directors, we have read that directors will also be having duty to approve this amalgamations and merger. That means to enter into any amalgamation or merger, first of all directors of, that is board of directors of such company, have to approve the amalgamation or merger. That is the reason why along with the notice you have to send draft of proposed terms of scheme of merger which is approved by board of directors of merging companies. See, let's say 2 companies, A Limited, B Limited are merging. Whether this has to be complied by both the companies? The answer is yes, because we have discussed that both the companies will be known as merging companies. Therefore, they have to send notice to their shareholders, that is shareholders of A Limited, and B Limited has to send notice to shareholders of B Limited. Okay, and they have to conduct their meeting separately. A Limited will conduct meeting of A Limited shareholders, B Limited will conduct meeting of B Limited shareholders. Hope this is clear. Okay, this is the first requirement which has to be sent along with the notice of meeting. Coming to second requirement. Second one, confirmation that copy of scheme has been filed with the registrar. See, this copy of scheme of arrangement or amalgamation has to be filed with the registrar, that is ROC. Once you file this copy with the ROC, then ROC will give you an acknowledgement. This acknowledgement will act as proof of filing the document with the registrar. Along with the notice, you have to send this acknowledgement, that is confirmation that you have filed the scheme with the registrar. Okay, that is the second requirement. Coming to third requirement, report explaining effect of compromise on, here compromise means amalgamation. Okay, report explaining the effect of compromise on shareholders, key managerial personnel, promoters and non-promoter shareholders. See, here creditors have not come because creditors will have nothing to do with amalgamation. Only shareholders and key managerial personnel and promoters, these are the people who will be affected by amalgamation. Therefore, you have to submit how they are affected, how much value they are going to lose or how much value addition they are going to make. This kind of effect which the amalgamation had on the shareholders or key management persons has to be sent along with the notice in the form of a report. Okay, and also this report should specifically laying out particulars regarding the share exchange ratio, specifying any special valuation difficulties. See, we are saying that A Limited is taking over B Limited. While taking B Limited, A Limited will issue its shares to B Limited. While issuing, they will issue as per the share exchange ratio. They will calculate the share exchange ratio. That is, for how many shares of B Limited, how many shares of A Limited should be issued. Let's say for one share of B Limited, one share of A Limited is being issued, then share exchange ratio is 1:1, that is 1 for 1. If at all 2 shares are being issued, then the share exchange ratio will be 2:1, sorry 1:2. That is, for every 1 share you are issuing 2 shares. That would be share exchange ratio. Along with the notice, you have to communicate the share exchange ratio that is being offered. And fourth point would be valuation report from the expert. See, in the present case we are amalgamating. For the purpose of amalgamating, we have to calculate purchase consideration. How purchase consideration will be calculated? Based on the net assets value of transferor company. For the purpose of calculating this net assets value, who will calculate this net asset value? Valuer will calculate. That is the reason why valuation report from the expert calculating that net asset value should also be sent along with the notice of the this meeting. That would be the fourth requirement. Coming into fifth requirement, supplementary accounting statement if the gap between last date of previous financial year and first meeting to approve merger or amalgamation exceeds 6 months. What is this supplementary accounting statement? Let's say, let us take a timeline. Okay, let's say this is start of financial year, that is 1st of April 2021. Now after financial year, merger is being proposed. Sorry, for the purpose of still merger has not taken place, but for the purpose of approving the merger, presently we are giving notices to the shareholders so that the shareholders will attend to the meeting and they will approve the merger. Now this meeting for approval of this merger is being held on, let's say April, May, June, July, August, November. Let's say it is being held on 1st of November 2021. Okay, now on this date we will be having financial statements of that transferor company till this date. Here still the financial year has not ended, we will be not having financial statements for this period. And this period is how much is the gap between these two dates? April, May, June, July, August, September, October, that is 7 months gap. November na 8 months gap. The gap is 8 months, which is more than 6 months. Okay, therefore since gap between the end of financial year and first meeting for approval of this amalgamation is more than 6 months, company has to prepare supplementary account statement. Basically supplementary account statement means you have to prepare profit and loss and balance sheet, P&L and balance sheet for this intervening period of 8 months, since it is more than 6 months. If at all the gap is less than 6 months, then this supplementary account statement is not necessary. Okay, this supplementary account statement includes transactions which have taken place during this intervening period. Okay, hope you are clear with this concept of supplementary account statement. Here you can write first meeting for approval of merger is being held on 1st November 2021. You can take a note of this. See, you please don't write anything while I am explaining. I will give time to you to take note, or if the time given by me is not sufficient, you can pause the video and you can take a note, but please don't write while I am explaining. If you keep writing while I am explaining, there is a chance that you might miss the concept. Okay, hope you noted down. We'll move into the concept. See, that is the 5th requirement, that is supplementary account statement if the gap between last date of previous financial year and first meeting to approve merger or amalgamation exceeds 6 months. Hope now you understood this point of supplementary account statement. These are the 5 disclosures, or you can say 5 additional informations which you have to give along with the notice. See, these requirements are in addition to those specified under section 230. Okay, in section 230, let me see the subsection under which it is specified. Yeah, subsection 3, is it? Yeah, annexure with the notice. Yeah, subsection 3. The requirements which we have discussed now are in addition to these requirements. Okay, you have to specify these requirements. Along with these disclosures, you have to make those which we have discussed now. Okay, oh. Let us move into next subsection. We have completed subsection 2 of section 32. 232, section 232. Now we will move into subsection 3. C. Order of tribunal on agreement of compromise or arrangement. See, this is the final order that will be given by the tribunal. We have issued notice to the members. Members have came to the meeting and they have either approved the, if they approve the amalgamation or merger, then we will file this copy again with the tribunal, and the tribunal will verify it, and then it will give the final order. Okay, now let us see what should be covered in the final order that is given by the tribunal. The tribunal, after satisfying itself that the procedure specified under subsections 1 and 2 has been complied with, may by order sanction the compromise or arrangement, or by a subsequent order make provision for the following matters, namely. See, if the tribunal is satisfied that the compromise relating to this amalgamation or merger is as per the requirements specified under subsection 1 and 2 and requirements specified under section 230, then this tribunal will give the final order approving the merger, and this final order may contain all these requirements. That is, this order will contain some provisions which will answer these questions. We can't say questions, we will be dealing with these matters. There will be 10 points which you have to remember, which you have to memorize them. We will discuss them in a logical manner so that you will be able to easily remember them. Basically, these are the matters which should be dealt by NCLT in its order. Okay, these 10 matters should be present in the final order that will be given by the NCLT. Let us see them one by one. First point that should be mentioned in the order given by the tribunal, that is date of transfer. Let me first read this point, after that I will explain you. Okay, the transfer to the transferee company of the whole or any part of undertaking, property, liabilities of the transferor company from a date to be determined by the parties, unless the tribunal, for reasons to be recorded by it in writing, decides otherwise. Basically what it says is that, see, let us say this is the order that tribunal has passed. Order, okay, so order of tribunal, order of tribunal. In this order of tribunal, the first point to be covered is, let's say for this A Limited, B Limited, B Limited is merging with A Limited, so A limited is transferee and B limited is transferor. This is the example. Okay, now in the order of the tribunal, the first point should deal with assets and liabilities. That is, which assets and liabilities of B limited will be taken over by A limited. Order of tribunal has to specify the list, and along with this it has to specify the date from which this merger will be effective. Okay, these 2 points it has to cover here, that is, which assets and liabilities will be taken by A limited and from which date the merger will be effective. Basically, the effective date of merger will be mutually decided by these two companies unless tribunal specifically says that from this date the merger will be effective. Unless a tribunal specifically states that specifies the date of merger, the date of merger will be decided by the parties themselves. Okay, and the order of tribunal in the first point should specify which assets and liabilities of B limited will be transferred to A limited. Hope you are clear with this. I will write it some neatly so that you can understand it. First point, assets and liabilities being transferred. Okay, and date of merger. Okay, this is the first point. We will move into second point. See, second point, payment of purchase consideration. Let us read it, after that I will explain you. The allotment or appropriation by the transferee company of any shares, debentures or other like instruments in the company which under the compromise or arrangement are to be allotted or appropriated by that company to or for any person, provided that transferee company shall not, as a result of compromise or arrangement, hold any shares in its own name or in the name of any trust, whether on its behalf or on behalf of any of its subsidiary or associate companies, and any such shares shall be cancelled or extinguished. See what this point says. Basically, A limited is taking over B limited na. For this, A limited will basically give purchase consideration. That is, A limited will give purchase consideration to B limited. Now, in which form the purchase consideration will be given? Whether it is being given in equity, that is in the equity of A limited, or cash, or debentures, or depository receipts, or any other form. That is how the purchase consideration is being settled, that has to be mentioned in the order. Okay, And okay, let us note it down. After that I will tell you another point. You can say how the PC, that is purchase consideration, is settled. In the bracket you can write equity, cash, etc. Order of tribunal has to specify this point. And further, in the proviso it says that, see here the proviso, it said something about cancellation, it should not own. What is that point? Let us read it once again. Provided that transferee company shall not, as a result of compromise or arrangement, hold any shares in its own name or in the name of any trust, whether on its behalf or on behalf of any of its subsidiary or associate companies, and any such shares shall be cancelled. What does this point means? Let me tell you. See, here let's take the same example. Here the transferee company is A Limited. Now let's say that our transferor company, that is B Limited, is having, let's say, 10,000 shares. Okay, totally its share capital consists of 10,000 equity shares. Of this 10,000 equity shares, 1,000 shares are held by our A Limited, that is our transferee, the company with which B Limited is going to merge. These 1,000 shares are held by A Limited. Okay, now A Limited is purchasing B Limited. For the purpose of purchasing B Limited, A Limited will issue its shares to the shareholders of B Limited. Now A is also one of the shareholder of B Limited now, because it is holding 1,000 shares. Okay, let's say the share exchange ratio is 1:1. Okay, that means for every 1 share of B Limited, 1 share of A Limited will be given. Now since A Limited is also shareholder of this B Limited holding 1,000 shares, now for this 1,000 shares of B Limited, A Limited will get 1,000 shares of, okay, let me write it here. Okay, no problem. Will get 1,000 shares of A Limited. That means A Limited is holding its shares in its name itself. Is it possible? It is not possible in India. However, in other countries, some companies are allowed to hold their shares in their own name, but in India it is not permitted to hold shares in their own name. Therefore A Limited has to cancel the shares. Okay, after it allots shares in the name of A Limited has to cancel the shares. That is the point which is being said as proviso. Hope you understood this concept. Okay, let me again summarize you. Basically B Limited is transferor company and B Limited is having 10,000 shares, that is entirely the total number of shares of B Limited are 10,000. Of this 10,000 shares, 1,000 shares are owned by A Limited. Okay, now A Limited is taking over the B Limited. For this purpose of taking over, A Limited will give purchase consideration to B Limited in the form of equity shares. That is, for every 1 share of B Limited, 1 share of A Limited will be given. Now since A Limited is holding 1000 shares of B Limited already, in exchange of these 1000 shares of B Limited, A Limited will get 1000 shares of A Limited itself, which is not permitted to hold. Therefore, A Limited will have to cancel those 1000 shares of A Limited. That is the concept which is dealt as proviso. Hope you noted this down. Okay, that is the second point which you have to mention in the which tribunal has to mention in its final order. Moving to next third point, that is continuation of legal proceedings. Continuation by or against the transferee company of any legal proceedings pending by or against any transferor company on the date of transfer. See, let's say before the amalgamation is being entered, there are some court cases or proceedings which are pending against this B Limited. Now, after this B Limited gets merged with A Limited, B Limited will not be there. It will be dissolved. Now, what about the pending cases against B Limited? These pending cases will also be transferred into the name of A Limited. Okay, this kind of provision has to be made in the order made by the tribunal. And not only cases pending against B Limited, let's say there might be some cases which B Limited has put against some other companies, and even those cases will be transferred in the name of A Limited. Okay, hope this is clear. Provision for this transfer has to be provided in the order of tribunal. Let us write third point, that is transfer of pending legal proceedings against transferor company have to be transferred in the name of transferee company. Okay, that is a third point. Fourth point, dissolution without winding up of any transferor company. What is this point? Let us understand this. It says the order has to provide for dissolution without winding up of any transferor company. For the purpose of understanding this concept, first of all you should know what is the meaning of dissolution and what is the meaning of winding up. What is the difference between these two terms? First of all, let us understand the difference between these two terms. Later on we will come to this point. Okay, first of all, starting with winding up. See, what is meant by winding up? winding up. Let's say this is the balance sheet of the company. Here it will be having okay, liabilities. Now I forgot where will be liabilities. Here it will be having liabilities, here it will be having assets. Okay, now winding up means these assets will be sold off and the amount realized will be used for discharging these liabilities. The process of selling off the assets and discharging the liabilities is known as winding up. That's it. Winding up means just up to this point will be known as winding up. You will sell the assets, from the amount realized through these assets you will be discharging the liabilities. That will be known as winding up. Simply you can say that winding up means making the balance sheet empty. There will be no assets, there will be no liabilities, but the company will be in existence. See, once the winding up procedure has been completed, there will be no assets, no liabilities, but the company will be in existence. Still it will be existing without any assets and liabilities. Okay, the balance sheet of company will become nil. Simply we can say that the process of making the balance sheet of a company nil is known as winding up. Now you have wound up, that means you have made the balance sheet of the company nil. You have sold the asset, you have discharged the liabilities, but still the company is in existence. To kill the company, basically you have to kill the company. After winding up you have to kill the company. The process of killing the company is known as dissolution. Okay, dissolution means killing the company which has completed its winding up process. That is not required, you can just mention killing the company. That will be known as dissolution. This is the basic difference between winding up and dissolution. Dissolution will come only after winding up has completed. Okay, hope this is clear. And how the just you said dissolution means killing the company. How will the company be killed? Through order of tribunal. Okay, through order of tribunal. Basically tribunal will pass an order stating that so and so company has been dissolved from this date, and after this date this company will not be in existence, and this copy will be published in the official gazette. From that date it will be deemed that company has been dissolved, that is company is killed. Now see, still the concept has not completed. We just discussed what is winding up, what is dissolution. Hope now you understood the difference between dissolution and winding up. Let me repeat once again. Winding up means process of selling assets and discharging liabilities, that is making the balance sheet of company nil. After winding up has completed, the company will be still in existence, but it will not be having any assets or liabilities. Okay, now dissolution will come to kill this company we have to dissolve the company. How you will dissolve the company? Company will be dissolved by order of tribunal. Okay, now let's see. We can dissolve the company in two ways. See, here the interesting part comes. Dissolution of company can be in two ways. first one is through winding up. Okay, that means first of all you have wounded up the company, that is you have made the company nil, so made the balance sheet of the company nil. After that you are dissolving. This is the one process that can be followed to dissolve the company. And the second process is through amalgamation. Through amalgamation, how is it possible? See, in amalgamation, basically what will happen in amalgamation? There will be two companies. Why this big diagram is not necessary? There will be two companies, A Limited, B Limited. In our example, A Limited is taking over B Limited now. Basically, A Limited will be having its liabilities, its assets. Even B Limited will also be having its liabilities, its assets. Now, what will happen during the amalgamation? While doing the accounting, what you will do? All the liabilities of B Limited will be transferred to A Limited's balance sheet. All the assets of B Limited will be transferred to A Limited balance sheet. That means what you are doing here, technically you are making the balance sheet of B Limited nil by transferring all the assets to A Limited, all the liabilities to B Limited, which we have done in case of winding up. Even in case of winding up, we have sold the assets and discharged the liabilities. But in case of amalgamation, we are not selling the assets, we are just transferring them to A Limited, and liabilities are also transferred to A Limited. After transferring, there will be no liabilities or no assets in B Limited. Okay, now there are no assets or no liabilities in B Limited, but the company is still in existence. Now we have to dissolve the company. Okay, how you will dissolve the company? Through order of tribunal. This is known as dissolution without winding up. Dissolution without winding up. Okay, let me see. After, through amalgamation, you will make the balance sheet nil, and after that you will have to dissolve the company. This concept of dissolving the company through amalgamation is known as dissolution without winding up. Okay, hope this is clear. Since if you dissolve the company through this amalgamation procedure, no winding up will be involved. That is the reason it will be known as dissolution without winding up. If you want to dissolve the company without winding up, then you should compulsorily have order of NCLT. Why order of NCLT? Because you are going to amalgamate. For amalgamation, you have to get the order of NCLT under section 232. Okay, therefore you can conclude that if you have to dissolve a company without winding up, then you should have order of NCLT. That would be our fourth point. wherein the order of NCLT should specify for dissolution without winding up. Okay, hope you are clear with this point. That is our fourth point, which says dissolution without winding up of any transfer or company. Okay, you can note down this. I didn't give you the time. You can note down this entire concept. First of all, you write this difference between winding up and dissolution. Winding up versus dissolution. Winding up means making the balance sheet nil. Making balance sheet nil. Or you can write selling of assets and discharging liabilities. Dissolution means killing the company. How you will kill? Through order of tribunal. That is dissolution. Now, two processes through which a company can be dissolved. That is dissolution through winding up, dissolution without winding up. Hope you are done with this. Okay, we'll move on to the next point. Fifth point, provision for dissenting shareholders. C. Provision to be made for any person who within such time and in such manner as tribunal directs dissent from the compromise or arrangement. See, for even for this point also, if you have to object to the compromise or arrangement, the same limits which we have discussed in section 230, that is, in case of shareholder, he should have at least 10% of total shares, and in case of creditor, he should have at least 5% of outstanding debt. But in the present case, this creditors limit will not be relevant because it is relating to amalgamation. Now only shareholders will be relevant. For the purpose of objecting to the scheme, you should have at least 10% of total shareholding. If at all any of the shareholders dissent to the amalgamation, then the order should provide an exit route for these shareholders. That is, the order should provide an option for these shareholders to sell off their shares or any other alternative. which we can say as provision for dissenting shareholders. Order should deal with this point. That would be our fifth point. Okay, fifth point is provision for dissenting shareholders. Order has to deal with this point also. Okay, moving to sixth point, NRI shareholder. NRI shareholder. See, share capital is held by any non-resident shareholder under the foreign direct investment norms or guidelines specified by central government, or in accordance with any law for the time being in force. The allotment of shares of the transferee company to such shareholder shall be in the manner specified in the order. See, what it says basically is that, let's say see here, we'll continue with this example. Here I have said that the company B Limited is having 10,000 shares. Of this, 1,000 shares are held by A Limited, and of this 10,000 shares, 2,000 shares are held by NRI. Some non-resident Indian is holding 2,000 shares. Now, for these 2,000 shares, the purchase consideration to be paid by A Limited will be as per procedure specified in order. It cannot give 1:1, which it is giving to current shareholders. Basically, if order specifies to give 1:1, then it can give, but it cannot decide on its own how many shares to be given to NRI. It has to follow what the NCLT says in order. The reason is, the person is NRI, that is, someone who is not belonging to India. If at all we make any fraud or any kind of inequality with these people, then it would not be that good, or you can say it would not be good manners, you can say. So what NCLT says is that I will specify you the ratio, the share exchange ratio, in which you have to settle to this NRI. Therefore, the order also should specify the payment terms for NRI shareholder. What it says, payment terms to NRI shareholder. Okay, NCLT is taking a special care in respect of these NRI shareholders. It is giving a special treatment to these shareholders. So as to encourage their investment into India. Okay. Coming to next point, transfer of employees. The transfer of employees of transferor company to transferee company. See, it's obvious that if A Limited is taking over B Limited, even the employees who are working in B Limited will become employees of A Limited. This has to be provided in the order. Okay. Transfer of employees. Basically, this question is not still tested in the examination. Therefore, there might be a chance that ICI may suddenly test this question in the exam. Therefore, this 10 points are very important. ICI might ask in the exam anytime. That was our 6th point. Moving to 7th point. Where the transferor company is a listed company and the transferee company is a unlisted company. Okay. Okay, we'll note it down here after. Okay, first we'll read and note down. No problem. The transferee company shall remain an unlisted company until it becomes a listed company. Okay. See, what it says is that, let's say, transferor company. In our case, transferor company is B Limited because it is giving its business to A Limited. Okay. Transferor company is a listed company. It is listed in the stock market. And transferee company, that is A Limited, is unlisted company. Now, since A Limited being unlimited company is acquiring this B Limited, which is a listed company, whether A Limited becomes listed company because of the reason that A Limited is acquiring a listed company, A Limited will not become a listed company. It will continue to be a unlisted company only until A Limited gets itself listed into the stock market. That is the point which is said by this 7th point. Now, if shareholders of transferor company decide to opt out of transferee company, provision shall be made for payment of the value of shares held by them and other benefits in accordance with predetermined price formula, or after valuation is made and the arrangements under this provision may be made by the tribunal. See, basically what it wants to say is, it wants to protect the shareholders of this transferor company since it is a listed company. Let's say why it wants to protect. Let me explain you why it wants to protect. What happens is, this A Limited, our A Limited, the same example which we have discussed earlier. A Limited is transferee company, B Limited is transferor company, but in this case B Limited is listed company. Okay, and A Limited is unlisted company. Now A Limited is taking over B Limited. In this case, let's say some of the shareholders of B Limited, okay, so some of the shareholders of B Limited have not agreed with this amalgamation. Okay, they have not agreed with this amalgamation. Then our tribunal has to provide a way out to these shareholders, that is exit option. But in this case, since shares of this B Limited are listed in a stock market, once this news has come into the stock market saying that some unlisted company is taking over this B Limited, that is listed company, the share price of this B Limited will fall drastically in the stock market. Okay, it will fall. The reason is, once this amalgamation gets completed, the shares will not be available in the stock market. Therefore, the share price of the B Limited will fall drastically, and it will cause loss to the shareholders who are not agreeing with this amalgamation. Therefore, to protect these shareholders, the order, that is the order that has been given by the NCLT, should specify a predetermined formula for calculation of amount to be paid to these dissenting shareholders. Amount to be paid to dissenting shareholders. Okay, it has to specify a predetermined formula based on which amount to be paid to this dissenting shareholders will be calculated. Or if predetermined formula is not provided, what it should do? Provision shall be made for payment of value of shares held by them and other benefits in accordance with predetermined formula, or after a valuation is made. See, if this predetermined formula is not given in the order, procedure for valuation has to be specified. Either of this has to be specified in the order. Okay, the main intention behind this is to protect the dissenting shareholders. Why to protect the dissenting shareholders? Since it is a listed company, once this news come into market, the share price of this listed company will fall drastically, and there will be no option for these dissenting shareholders to sell their basically it will cause some loss to this dissenting shareholders if they sell their shares in the open market. That is the reason why order should provide some exit option to this dissenting shareholders without causing any loss to them. You can note this diagram. You note down. I'll come in 5 minutes. I'll get water. I'm back. Hope you noted this down. We'll move to the concept. See, here basically it should provide that transferee company will remain unlisted until it gets itself listed. Okay, and along with this it should provide protection to the existing shareholders of transfer or company. We can say that it should provide a predetermined formula for calculating amount payable to dissenting shareholders. Okay, DS means dissenting shareholders. Coming to the 9th point, which has to be mentioned in the notice. See, here still there is a proviso which states that provided that amount of payment or valuation under this clause for any share shall not be less than what has been specified by Securities Exchange Board of India under any regulations framework. See, the amount which you calculate using this formula should not be less than the amount which has been specified by SEBI. Okay, you have to take that care. Coming to the 9th point, set off of fee. The transferor company is dissolved. The fee, if any, paid by the transferor company on its authorized capital shall be set off against any fee payable by the transferee company on its authorized capital subsequent to amalgamation. See, I think you know that for the purpose of registering this subscribed capital, we have to pay some fees to the MCA. Okay, if you based on your amount of subscribed capital, the fee will be depending. If you want more subscribed capital, then you have to pay more fee to the not subscribed capital, authorized capital, my mistake. For authorized capital, basically company will be having authorized capital now. For the purpose of getting this authorized capital from MCA, it has to pay some fees to the MCA. Let's say authorized capital is 5 lakh. Then not all this authorized capital might be paid up or issued share capital. Let's say issued share capital is 4 lakh, and after some days, let's say company has issued some additional shares from this authorized capital and issued share capital reached 5 lakhs, that of authorized share capital. Now if company wants to again further issue shares, then it has to first increase its authorized share capital. Okay, let's say it has to increase authorized share capital to 10 lakh. For the purpose of increasing this authorized share capital, it has to pay some fee to MCA. Okay, this is the basic concept. I think most of you know this. Now what this ninth point says is that, see, where is our example? See, we have transferee company. Let's say share capital of this transferee company is 1000, and even the subscribed share capital, sorry, authorized share capital is also 1000 only. Now since transferee company is taking over this transferor company, let's say the transferor company is having share capital of 500, which is the both are same, both authorized and issue, both are 500 only. Okay, now since this transferee company is taking over this B limited, the share capital, the issued share capital of this transferee company will increase by 500, that will become 1500, but the authorized capital is 1000 only. Okay, till the amalgamation has happened, the authorized capital of the transferee company is 1000 only, but once the amalgamation happens, the issued share capital becomes 1500, because even the share capital of this transferor company will come and merge with this company. Now what it says is that, for increasing this authorized capital from 1000 to 1500, transferee company has to pay fee to MCA. Now what it says is that, earlier this transferor company would also have paid the fee to MCA for the purpose of this authorized capital. Now this transferee company can set off the fee which has been paid by the transferor company. After setting off the fee which has been paid by the transferor company earlier, the remaining fee has to be paid. Hope this is clear. This is the concept relating to setting off of fee for the purpose of authorized capital. Even this point has to be provided for in the notice. Ninth point, set off of MCA fee, you can say, in bracket you can write authorized capital. Okay, I'll give you the time to note down this order, don't worry. Okay, now you please concentrate on what I am saying, otherwise you will miss the concept. We have completed 9 points, and the last 10th point is, such incidental, consequential and supplemental matters as are deemed necessary to secure that the merger or amalgamation is fully and effectively carried out, and such other incidental matters should also be provided in the order. You can say such incidental matters. Now you can quickly take a note of this entire points which we have discussed. If you want, you can also draw this diagram also. You can pause the video and take a note. I am moving it. You can pause and take a note. Hope you are done with it. See, this point we have already discussed in section 230. What it says is that provided that no compromise or arrangement shall be sanctioned by the tribunal unless a certificate by the company's auditor has been filed with the tribunal to the effect that accounting treatment, if any, proposed in the scheme of compromise or arrangement is in conformity with the accounting standards prescribed under section 133. Basically what it says is that the auditor has to give a certificate to the tribunal stating that the accounting treatment for this amalgamation will be done as per the standards prescribed under section 133. Okay, this kind of certificate has to be provided by the auditor. Okay, by that we have completed subsection 3. Now moving into subsection 4. Subsection 4, effect of an order of tribunal. Okay, where an order under this section provides for the transfer of any property or liabilities, then by virtue of the order that property shall be transferred to the transferee company and the liabilities shall be transferred to and become the liabilities of transferee company, and any property may, if the order so directs, be freed from any charge which shall by virtue of compromise or arrangement cease to have effect. Basically what it says is that if the order provides that the assets and liabilities of transferor companies should be transferred to transferee company, means they have to be transferred, and if there are any charges against the assets of this transferor company, then even those charges will be freed if the tribunal provides so. That is a simple subsection. Coming to subsection 5, filing of certified copy of order with registrar. Okay, every company in relation to which the order is made shall cause a certified copy of the order to be filed with registrar for registration within 30 days of receipt of certified copy of the order. Okay, the same thing which we have read in section 230. The final order that has been passed by the tribunal has to be, submitted to the registrar by the company within 30 days from the date of receipt of the order. Okay, subsection 6, effective date specified in the scheme. The scheme under this section shall clearly indicate an appointed date from which it shall be effective, and the scheme shall be deemed to be effective from such a date and not at a date subsequent to the appointed date. Basically what it says is that the scheme should specify particular date from which the amalgamation or this merger will start. That is a simple subsection which you can understand. Moving to subsection 7, filing of duly certified statement of compliance of scheme with registrar. See, this is something important, please concentrate. Every company in relation to which order is made shall, until the completion of the scheme, file a statement in such form and within such time as may be prescribed with the registrar every year, duly certified by chartered accountant, cost accountant or company secretary, in practice indicating whether the scheme is being complied with in accordance with the orders of the tribunal or not. See, once the tribunal has passed the final order, then this order has to be implemented. That is, the amalgamation or merger has to be implemented. And for your kind information, the practical implementation of this amalgamation or merger will take not less than 1 year. In some cases, it will happen 2 to 3 years time to implement the amalgamation. Okay. Now, since it is taking some 2 to 3 years, what the section says is that at the end of every financial year, you have to, that is the company have to submit a certificate from the chartered accountant or cost accountant in practice, saying that the scheme is being implemented as per the order of the tribunal. There is no deviation from order of the tribunal. The scheme is being implemented as per the order. This kind of certificate has to be taken from a chartered accountant and has to be submitted to registrar. Is it registrar or tribunal? Okay, it is registrar. Has to be filed with registrar every year until the implementation of this amalgamation has completed. Every year this kind of certificate has to be filed with the registrar. That is subsection 7. And subsection 8, punishment for contravention. Contravention from which section? Let's see it. If a company fails to comply with subsection 5, what does subsection 5 deal with? It deals with filing of certified copy of order of registrar. See, once the tribunal gives final order, company has to file this final order with the registrar. If company fails to file this final order with the registrar, then company is liable to punishment. What is the punishment? Let us see it. See, the company and every officer of the company who is in default shall be liable to a penalty of 20,000 rupees, and where the failure is a continuing one, with a further penalty of 1,000 rupees for each day after the first during which such failure continues, subject to maximum of 3 lakhs. That would be the penalty which would be levied on the company and officers. There will be nothing to be explained in the penalty. We have to by heart the penalty. There is no other option. By that we have completed section 232, which is relating to amalgamation. Take some 2 minutes and please go through the section 232. Basically, the entire procedure which we have discussed in section 230 will be applicable even for section 232 also, along with this additional additional requirements which are specified in section 232. relating to amalgamation. The major difference, the major point in this section 232 is the order, the 10 points which we have discussed, that is very important in this section 232. That is the points which the order of tribunal should deal with. That is more important. Okay, we'll move into the next section which is related to amalgamation. There are two small sections which are related to amalgamation. We'll see those two small sections, that is 239 and 240, just small sections. Section 239, what it deals with: preservation of books and papers of amalgamated companies. See, once the amalgamation has completed, what should the transferor company should do with its books? Whether it has to preserve its books, if it has to preserve, for what period it has to preserve, or it can dispose of its books. That will be dealt with section 239. Let's see what section 239 says regarding preservation of books of these transferor companies. The books and papers of a company which has been amalgamated with, or whose shares have been acquired by another company under this chapter, shall not be disposed of without the prior permission of central government, and before granting such permission, that government may appoint a person to examine the books and papers or any of them for the purpose of ascertaining whether they contain any evidence of the commission of an offence in connection with the promotion or formation or management of the affairs of the transferor company or its amalgamation or acquisition of its shares. See what this section says. See, in our case, our transferor company is B Limited. Okay, the amalgamation has been completed and B Limited is transferred to A Limited. Now, what should the transferee company, that is A Limited, should do with the books of B Limited? Let's say A Limited wants to dispose of this books of B Limited. Now, before disposing the books, A Limited should obtain approval from central government. That is, before disposing of books. Now, to grant this approval, what central government will do is, central government will appoint a person to inspect the books. Can we use inspect? Let's see what section he has used. Appoint person to examine. Okay, let us use the same term. To examine the books regarding any fraud has taken place or not. Okay, regarding fraud. After this examination has been completed, then CG will grant the approval. CG will grant approval. For disposing the books. Okay, hope this is clear. If you want, you can note this down as well. This is dealt in section 239. Section 239. Okay. Hope you are done. Moving to next section, that is section 240. A small section again. Section 240. Liability of officers in respect of offences committed prior to merger or amalgamation. Okay, let us read it. After that, I will explain you. Yeah. Retrospective effect of liability. Okay, notwithstanding anything in any other law for the time being in force, the liability in respect of offences committed under this act by the officers in default of the transferor company prior to its merger, amalgamation or acquisition shall continue after such merger, amalgamation or acquisition. Basically what it says is that, see, section 240. Section 240, what it says that, basically B Limited is being amalgamated with A Limited, that is B Limited is a transferor company. Now let's say in this B Limited there is a particular officer by name Mr. Fraud. Okay, he has committed some frauds and there are some legal proceedings that are being going on against him. And now this B limited is being amalgamated with A limited. Now in this case, tell me, after the amalgamation has been completed, whether legal proceedings against this Mr. Fraud will get completed or will continue. The answer is will continue, just because of the reason that the company has been amalgamated with other company. The legal proceedings which are being going on against the officers of the transferor company will not get over. Okay, they will continue as it is. That is being said by section 240. That's it. Still we are having some 5 sections to discuss. We will discuss them in our next class.